Well, listen, Amber and I are really excited about what we're about to do today. And as we were talking about this, I was just thinking like, why am I here? What am I hoping to achieve in this? What is my intention? And I hope that you do this with everything that you do. I think one of the things that we've got to think about as being a loan officer today is not how to be more efficient, but how to be effective. And a way of being effective is to be thoughtful about what it is that you're hoping to achieve, what it is that you want people to feel. Why are you at this meeting or making this phone call or calling your database or whatever it is that you're about to do? What is your intention? And so for me, I'm here because we have spaces to fill in our offices. We want to recruit. I've never openly and actively recruited. I like driving business and I like helping my people succeed and win. And so I spend almost all of my time, as does Amber, in the field driving business and coaching our people. But I think right now we have the capacity and want to serve more people. So that's a huge motivation. I'm just going to come out and be really open with. We believe in our leadership. We believe in our model. And we believe we could find other incredible people that we want to pour energy into. And, more energy creates more energy. More inspiration just drives us all forward. But I'm also here because I feel like so many people right now are drifting and lost and scared. I don't care how long you've been doing this. We are in some tough, challenging times. I've been doing this 18 years. Amber, how long have you been here? 20 years, right? And we're all getting our asses kicked. And so I want to serve our industry. I spoke at the Modern Mortgage Summit last week. I was on Dave Savage's deal. And the more loan officers I talk to, the more branch managers I talk to, the more I go, I want to give more. I want to show up for people. And this is going to be a pivotal moment. I think that people will literally look back on this time and go, I remember when. And we want to be here in front of you for that. So we'll just start sharing. And you guys are going to get a lot out of Amber today. It's going to be amazing. I got to give it up for my marketing manager who put all this stuff together. Of course, like all of you, I'm like a crazy idea person. I'm like, oh, we need this and this and this. And Amber and I were like, can we just do a webinar for 10 people? So hopefully you really enjoy everything that we put behind the effort and the research and the preparation for today. All right, so you got Amber and I. I'm officially a district manager. I've always never cared about titles. I've always said, call me dumbass, just pay me. But anyway, that's my official title. I think I'm a VP of sales and something else, but Amber's a senior loan officer and a branch manager for us in Chandler, Arizona. You could see that you've got our Instagram handles down at the bottom. You've got QR codes so you can follow along and all the stuff that we're doing here. So, oh shoot, I thought I had Amber first. All right, well, you're going to learn about me first. So I'm in Reno, Nevada. I believe in living an extraordinary life. It's been bubbling inside of me since I was young. I have always been a person that's maybe considered intense, bossy, but I just believe that, like life is worth living. Like it's time to suck the marrow out of life. So anyway, I just shared some fun pictures from the last year with, girlfriends that I've had. I struggled making friends when I was younger because I was so driven. I've at times been so laser focused on this business that when you do the wheel of life, it was like work was the shooting star and every other part of my life was very dim. So I worked really hard about creating a well-balanced life, not being one-dimensional, as my husband would put it. So I'm going to talk a little bit about living in Europe. And there's my mom and family and the whole deal. I'm 42. You want to know my bra size, my social, whatever, I'm an open book. I'll tell you whatever you want to know. Here's Amber. Amber, tell us about you. Where are you and who are you and why are you here today?
Hey, everybody. I'm Amber Kovarik. I'm out in Chandler, Arizona. And so awesome hearing Shayla talk about herself. And I just know that we were meant to meet each other. And I remember seeing Shayla on stage for the first time about 10 years ago and being like, holy smokes, that is a badass chick. And she embodies everything that I've also wanted in my life. I've had this like burning desire since I was little bitty to live this big life and not feel like I have to sacrifice in one area to gain in another. And I think life always ebbs and flows and we go through seasons where we have to give more focus and attention to the different areas of our life. But I'm on a freaking mission like Shay to have it all, to make a big impact. And I'm so grateful, Shay, that you led me to living this big life, because it's through you being so bold and like paving this path that I saw that it's possible, that I can do it, because so many people have a somewhat limited mindset in like what is really possible in life. And you need somebody that's opening your mind to like, no, whatever you want to do, you are capable of doing. And so when I met Shayla and we really got tied together and she took the chance in opening a branch out here in Arizona with me, my life like crazy expanded, because I believed it was possible. And over the last couple of years, we bought our mountain house and go skiing every weekend. And we bought our lake house out in South Carolina and go boating all summer. And I'm traveling more than I've ever traveled, because Shay taught me the 12-month calendar, which is like the most epic way to make sure that you're living the biggest badass life that you can. So I'm so grateful to be here today, and I'm here to learn from Shayla. I'm a continual learner. What we're experiencing right now is new to me, just like to a lot of you. These are new challenges, and to give back to an industry that has given so dang much to me. So I'm pumped. Thank you so much.
Yeah, and I've been better because I've had to grow big enough to lead somebody like you. And I think that's why hang around people that intimidate you a little bit to where you go, oh shit, I got to step up my game. I got to play bigger. That's what it's been for me being around you, Amber. And so it's fun to lead together, to live together, to raise our daughters together. I love it all. All right. So just a quick bit on my journey, because like Amber said, a lot of the stuff I'm going to teach today, I did not learn from early mentors. I had to claw and scratch and beg and study and push to learn what I know. And the reason I'm so intentional and focused on learning this is because I am obsessed with helping loan officers break through and crush it. I'm a regular chick. I have no college degree. My parents are drywall contractors. I'm in Reno, Nevada. I always look at myself as the underdog. I'm blonde, whatever the case is. But for the first 6 years of my career, I had no mentorship, really. I had no management. I was not in a branch culture that had sales meetings or high fives or, collaboration or coaching. I just literally made it through hustle and drive. After 6 years, I found coaching. I also found Guild Mortgage. And so for the last 13 years I've been here, I was stuck at about 300 grand a year, which I was very, very, very grateful for, because I felt like I was making doctor level money with a high school diploma. And I loved what I was doing. I absolutely loved the struggle and the puzzle and the emotional part. And it takes so much talent to be good at this business. And I think we're finding that now, right? All the people that in 20 and 21 rushed in the business or had these explosive results are now going, oh, damn, you've got to be good at so many little things and put those together month over month to have explosive results in our business. And we're all being revealed for our strengths and our weaknesses right now, which is a cool opportunity. So the last 12 years, I hired my first assistant in 2010, 2 loan officers in 2011, another 3 in 2012. I never really wanted to build a branch because I had a low opinion of other loan officers. I really thought they would just threw noodles against the wall, talked out of both sides of their mouth, weren't professional, career-oriented, long-term thinkers. They were just into making a quick buck and saying whatever they need to say. But over the years, I've totally restored my faith in loan officers. And I believe if you're a good person with the right values and you work your ass off, like sky is the limit in this industry. I've had 2 babies, built a house, dealt with family addiction, a sister with, kids going into foster care, dealt with, heartache and stress and growth and all of that stuff as we all do with real life. But was able to grow my personal production and team from 28 million to 230 million, my branch from 28 million to 1.9 billion. Today, by the way, let's talk about what's real. We're all down 75%. I'm going to be super happy with my group doing about, 500-600 million this year, right? But what I've always said is it doesn't matter what you've built in the past, guys. I don't care if you've been doing it like Amber and I, 18 or 20 years or 3. What right now requires is that you put those shiny pictures of the buildings and the things that you've built on the wall. And now get out your shovel and dig a new hole. Dig a brand new hole, build a new foundation, and focus on what it is you're building for the next 5 or 6 years, because that's what this is all about. I was a national coach for the core. A lot of my successes come from R&D, rip off and duplicate from core coaches and friends of mine. And then I built a coaching program inside a guild for our loan officers. And now I coach branch managers in a coaching program. I'm really proud about the people I've helped, more so than my results. I've helped 100 people, or 5 people have worked for me, and it's maybe more that have crossed that $100 million line. And I think, like Amber said, if first you can conceive it because you're hanging around other people that are doing it, then you can start believing it, and then you can achieve it. You can get your strategy in place, but you've got to have that conception first. So hopefully we give you a little bit of that today. And then the last 3 years is an interesting part of my story. I moved to Spain. So at the beginning of 2020, we moved to Spain to have a family adventure, to simplify our lives, to just spend the 4 of us, no nannies, no family, see the world, have an expansive experience, speak some Spanish. And I worked at nights and slept or played during the day, had a lot of time with my husband. Once COVID calmed down, we got to travel quite a bit. But the reason I share that with you all is because anything is freaking possible in this industry. That is what I can never, ever get over, is what is absolutely possible. And so I just feel like, we can all just build the life that we want to build. Here's a team of loan officers, my badass crew. I love every single one of these people, like genuine. I will not hire somebody unless I really, 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 really like them, because I want to be excited about them calling me whenever and however, and I want to get in the mud with these people and overcome obstacles and do things. These are the states in which I'm currently running offices in. I'm in SoCal and Westlake Village, in Golden, Colorado, Chandler, Prescott, at Scottsdale, Arizona. Amber's the leader that runs those areas in Chandler and Scottsdale. And then I run Prescott, and then Northern Nevada, and I'm in Reno. All right, so why do I think I'm qualified to teach you about margins and pricing and costs and business models and expenses? Because first, I'm growing too. I'm probably the most dysfunctional person on the call. Like, people go, how have you had this catastrophic success? Or I don't know, catastrophic, meteoric success. I'm like, I felt like a hot mess. It's just, I'm a tornado, but I'm less of a mess. But I've just used that chip on my shoulder, that drive in my belly, that feeling to go, you know what? I need to find other people like me. That's why when Amber and I found each other, it was like, oh, whoa, you're crazy, crazy driven. And, all this kind of shit. Like, we need to hang out together. Let's be on Misfit Island together. So I feel like I made every mistake. I'm continually making mistakes. I'm in the trenches with you. I'm a coach at heart. So the minute I learn something, like the minute I want to turn around and teach it, I'm obsessed with helping average people break through their barriers and crush it. And then the other thing is, I'm not a natural. I am self-taught. I always am trying to dissect with you, Amber. Are you a natural? What have you learned? I think you and I are both incredible students. Like, literally, I will watch Amber listen to a script, dissect it, take notes, and then implement it. Like, go for it. Be bold, be courageous. But like I told you, in high school, I lost for senior class president. I lost for student body president. I was thinking about other failures that I've had because I really didn't get people. I just never really understood people. I didn't know how to do sales. None of this was easily acquired for me, but I was so determined to learn. And I'm smart enough to find people who have what I want and then ask them what do you do? And then do it. And so I can encourage you to do the same thing. So, all right, today's agenda, we're going to talk about what's going on in the market. How do margins work? So let's understand rates and pricing. Understanding expenses and mortgage business models. And then let's talk about winning strategies, because Amber's killing it right now. And I want her to share those. We had her speak on stage at our leadership summit with Guild in front of 700 people. And Amber, your 6 minutes was like rated one of the best segments of the whole thing. So no pressure, but I'm expecting you to bring it for this crew today. So before I get into that, I was just looking at some data from a national data collector that it's proprietary. I'm not allowed to share those slides, but I want you guys to write down notes. And now is the time to take out your pen, because this is not watching TV or getting entertained. This is learning. I would love for you to be able to teach this to somebody else, right? Oh, we've got chat working again. This is so fun. Yeah, this is recorded. I'm sure Katie Shive, my marketing manager, will respond to a lot of this stuff, and hopefully we'll get some questions going here in a minute. Amber, supposedly your audio is garbled. Will you go down to your microphone and see if you're on your webcam or on your laptop? Thank you, John. That matters. We need to do that. And yes, those are Dragon Awards in the background. Amber is a Dragon winner. She's a stud. All right, write these down. In 2018, the average loan officer made $131,000. In 2019, $158,000. In 2020, $276,000. In 2021, $250,000. And in 2022, $139,000. Now, I have no idea where we sit in 2023, but the reason I'm passionate about what we're doing here is because a lot of people are living in their rearview mirror. A lot of people think they've got the skills, they've got the knowledge, they've got the know-how to be $250,000 earners or $500,000 or $800,000 earners, when really we got to get real with ourselves and go, where are my holes? What do I not know how to do? Am I being effective? You know what? Forget about the past. How am I going to show up tomorrow? How am I going to show up today? Where do I need to go? That was pretty striking. It's the reason a lot of people are getting out of the industry, right? Because if that's the average, there's a lot of people on the low side of the average. Now we've got some super top producers on this call. All right, so let's talk about today's market. Bottom line, there's an oversupply of loan officers. Just pure simple. Any fundamentals are supply and demand. There's too many loan officers, right? So this being hard and loan officers choosing to get other jobs and get out of the business is one of the reasons it's going to help fix the problem that we've got going on. So it's a smaller pie and everybody is fighting over that small pie at the moment. It's harder than 2008. In 2008, we had falling interest rates and rising inventory, more short sales, foreclosures, more inventory coming on, and lower rates. Now we've got rising rates and falling inventory, guys. It's double black diamond, but it's good to be able to ski on a double black diamond. Even if you have to go down pizza and your legs are shaking and you got to go, I'm sticking through it. I'm going to be resilient. I will get better. I'm not going to get bitter or resentful or pissed off. I'm going to get better. Get better. That's your choice in the whole thing. The time people are spending on their phones is higher than ever. That was not the case in 08. You could get people's attention much easier. And the way we have to show up for people has changed. Builders are 4 million units behind. That's not going to get caught up anytime soon. And here's the MBA forecast. I want you to write this one down because it matters on your margins and your model and what you're doing. Go look at your Q4 volume. Okay. Look at units. Units matter. How many loans did you do in Q4 of last year? So in October, November, and December of 2022. The MBA forecast that Q1, what we're just finishing, was down 18% from Q4. So if you averaged 4 loans a month in Q4, then you're going to average 18% less than that. If you average 20, you're going to be 18% down. Q2 is expected to be 28% higher than Q4. So again, if you average 10 loans in Q4, then you're going to be at about 12, 13, right? Now, you might go land builders, you might, do other things to control this, but this is just what the market is doing. And guys, all the effort that you're putting in today, yielding this kind of result, if you can sustain that effort, you're going to yield that much result from the same effort likely in 2024, right? As things stabilize, as people get further down the line. So why does this matter? You need to know your projections on what you think you're going to do in business. Do you have a budget? Have you adjusted your lifestyle? Have you actually looked at your business model with your team and gotten real with yourself? This is a time to get real. Pull the blinders off, pull the hope shades off. Like, what is the market really doing? I'm shoveling and digging a new hole. Am I in hard rock and bedrock and clay? How big is my foundation going to be? What am I building? You need to know that. So that's the forecast. So let's talk margins. Okay. First of all, I have to have a definition. When I say margin, I have to talk about the all-in margin. Okay. Because everybody's coming from a different place, whether you're working from a broker or a mortgage banker, or you work at Guild, you got to figure out what is the all-in margin. Okay. Here's the thing, write this down. We are all selling the same asset, Amber. We're all selling the same asset to the same buyer. Okay. Like seriously, it's not any different buyer. It's the same asset. The asset is worth what the asset is worth right now in the market. And that changes every day. What is somebody going to pay for a mortgage-backed security at a 7.25% or a 5.25%, it's worth what it's worth, period. So the only difference is how much revenue you're trying to bring in from that asset. Pure and simple. And where's that revenue being chopped up into? How much is going to a wholesale lender versus the broker, or a wholesale lender versus the umbrella company for brokers and the broker, or a corporate office in a retail setting and then the branch? Okay. So we're going to talk about all in margin so we can talk apples to apples. And then why are margins such a big deal right now? We are in what's called margin compression, but I want to teach you what that means. So that margins are the revenue we bring in. Okay. Write these down. In 2019, the average, and again, this is from big data, looking at banks and mortgage banks, and this is from a third party, and I can't share their slides, but this is the data. In 2019, the average revenue was $10,490 per loan. In 2021, the average revenue was about $13,500 to $14,000 per loan. And in 2022, it went about 10.5. So it's back in 2022, we were back basically to 2019 revenues. However, loan amounts have gone higher. So what that means is we're making less percentage on bigger loans, but you're still got to look at the dollars of revenue. If you're going to sell shoes, if you're going to sell Vans, Christian Louboutins, and Nikes, you got to know what revenue you're collecting from each of your shoes and what your costs are. You got to understand that bigger thing. So here's the cost equation. In 2019, it cost $8,872 per loan on average for a company to manufacture and close a loan in all areas. Okay. So what did that leave left? A profit of $1,600 a loan. Okay. However that was shared out, that's what it looked like. In 2021 and 20, the average cost was $9,500 a loan. Why? Because loan amounts went up. We all had to spend bazillions of dollars to recruit talent. So we had higher people costs. And as loan amounts went up, commissions on those loans went up if they were just paid on a basis points. So, but we had $13,500 to $14,000 in revenue. So it was fine that the expenses went up, right? Here's the crazy thing. In 2022, the expenses per loan are at $12,450. So the revenues dropped down to 10.5, but the costs have gone from 9,500 to 12.5. Why? Is it that all of a sudden we're paying $3,000 more per loan in commission? No, it's that all of these costs that we had to build for 20 and 21, bigger marketing, bigger ops, bigger offices, all this stuff that we had to build is a cost. And then now you drop in the number of loans. So that same cost for your office space, or the same cost for a compliance department, or the same cost for a marketing manager spread over less loans is a higher per loan. This is the problem in the industry, guys. This is why Loan Depot shut down all of their broker wholesale overnight. Isn't that a huge thing? This is why Flagstar shut down all this, because people can't figure out how to re-architect their costs. And we've all got to do it. We've got to re-architect our budgets at home. We've got to re-architect our costs as a loan officer team, as a branch, as a company. This is what this industry is calling us to do right now. So the last thing is, why am I getting beat so bad? So what's going on out there? Like, why, if somebody shops me, am I getting hammered? Like, they aren't just leaving me for 1/8 or 1/4%. They're leaving me for like 5/8%. So I'm going to show you. Traditionally, for every 1% in revenue that we want to earn, you only have to charge 1/4 in rate. So Amber, interrupt me if I'm going too slow or too fast.
Okay.
And guys, throw a Q&A, because now I'm getting technical and I want to re-explain. I really crave that you understand this. Like, you're investing your time with me. Like, I want you to get it. So traditionally, in a healthy MBS market where we don't have crazy volatility and unknown about what the feds are going to do and what's going on with inflation, if you need to earn as a company an extra 1% in revenue, all you have to be doing is selling 1/4 higher in rate, because the value of the asset in the secondary market, traditionally, not right now, but traditionally, is for every 1/8 of a percentage point, an investor will pay an extra 50 bips or half a point in revenue for that higher rate. Okay. That's traditionally why it is. So Amber, you and I have been doing this 18 to 20 years. We've never been the cheapest lender, but if you're a quarter higher in rate, can you sell it? Is your service worth it?
All day.
All day. But if you're if you're 3/4 out in rate, can you sell that with your service?
No.
No. They go, I love you, Amber. I love you, but sorry, right? You can't deal with that. So what's going on? Here's my rate sheet from September. Okay. This is only in September, the fall. So this is how much things have changed from September till March, and they will change back. This is short term, guys. You need to understand the industry and what's going on. This is short term, but check it out. To go from a 5.875, you had 2.875 in cost. You would have to go up all the way to a 6.25 to get another point. Okay. But at the lower coupons, from a 5.625 to a 5.875, you could get a whole point with only a quarter difference in rate. And then from a 5.25 to a 5.625, you got a whole point for only 3/8 in rate. And you could see as you go to the lower from 5 to 5.25, you got a whole point in revenue for just a quarter in rate. Okay. So just since September, check out what's happened. This is Monday. You see it's 6.5. It costs 1.625, highlighted in yellow. In order for me to get one more point in revenue, I have to go all the way up to a 7.125, a 5/8 difference in rate to earn an extra 1 point in revenue. Okay. Now, why do you need an extra 1 point in revenue? I don't know, because you've got fixed expenses. You want to afford an office, you want to afford a team, whatever the case is. This is why margins are so important right now. And while everybody's trying to figure out how to architect a margin and a business model that's going to allow us to be competitive, look at the difference between a 6 and a 6.5, a whole half a point of rate for only 1 point in revenue. Okay. This is why we are getting beat so bad, because if you're selling a 325 margin, remember that's an all-in margin, and somebody else over here is selling a 225 margin, they're earning 1 point less in revenue. So on a $300,000 loan, they're earning $3,000 less in revenue, but they get a rate a half point cheaper. That's what's going on, right? So what do we do about this? Okay.
Real quick. So, and Shay, the reason why the spread is so much greater at the higher interest rates, right, is because the appetite for a 7.125 interest rate is not there, because they believe the payoff of that loan, like the likelihood that that will pay off early, is so high that no one wants to buy those, right? So we're losing that revenue because of that. So, right, the lower rates have a slightly better revenue because less chance of payoff.
100%. That's why the MBS is compressed, is that there's not the appetite in the market. Yep. When you buy a security, you're expecting a return, right? So if I'm going to buy a 30-year note, a bond at 7.25%, I'm expecting to earn 7.25% interest for a period of time before a loan pays off. And there's a servicing value. There's a historical value based on how long will that loan stay on the books, right? Well, everyone believes that the Fed is overdoing the current, rate hikes. As we all know, they're going to shove us into a recession like they always do. And then they're going to have to pull back on it. We're seeing the bank failures happen as a result of that. So the reason there's no margin in those upper sheets is saying there will be lower rates. Everyone just doesn't know when. So you just don't have that margin there. Now, in a more normal, healthy market, we will go back to this place where you can get an extra 100 basis points in revenue for maybe a quarter. And okay, great, game on. But right now it's gnarly, guys. There's less pie, and then that exists. So what would you need the extra 100 basis points or 1% in revenue? Maybe for marketing, for team build out, for office space. Do you guys remember over the last 2 years, it's like, you got to have a CD team, you got to have a setup team, you got to have a whole person just to order insurance, you got to have a whole person to do VOEs, because we had so much volume coming through. It's like, listen, you work on the fries, you work on the pickles, Amber. Hey, Johnny, you're on the buns. Do not touch the pickles. That's Amber. Now we got to go.
Everybody's doing their own burger.
Everybody do the whole burger. That's the whole thing. But it's short term is the point.
Yep.
It's short term. Understand the industry. Okay. So let's talk about different business models. You got the brokers. Okay. This is a growing sector. Why? Because I believe everybody's like so confused about this thing and is like, well, I can have more control of my pricing or I can sell a lower rate. Okay. But let's just talk about what's really happening in the broker world. Wholesalers are raising their margins. Okay. Previous to this, you've got the CEO of United Wholesale and the CEO of Rocket, and their people are having fist fights in the parking lot with each other, and they're battling for who's the biggest. United Wholesale's got 54% market share in the broker space. Well, they posted a net loss of $62 million in the fourth quarter. They have now raised their margins because they bought the market. They got a bunch of people into the broker space because they believed if they got them there and let them play basketball at their thing and did all this stuff for them, that they'd be loyal. And then boom, now they raise their margins again so that they can at least break even, start being profitable. So this stuff is variable, right? And when United Wholesale was 54% market share is raising their margins, what do you think the rest of the wholesale lenders are doing? Same, right? Because everyone's got to make money and be in business and be sustainable. So right now, and I've done tons of price comparisons. I know people all over the industry. I'm looking at rate sheets as recent as 2 days ago. What I'm seeing is that wholesaler margins are generally about 40 bips. A broker margin is generally 250 bips. So the brokers of the world are selling a 290 margin right now, ish. Okay, now remember the broker cannot charge more than 3% in points and fees. So the wholesaler margin, they can move that as much as they want. They could bring their margins all the way back up to a point, but that broker is stuck. They are capped. They're really probably not going to be able to charge more than about 250 because you still have to charge an underwriting fee of $9.95 or $11.95, and you charge a processing fee or whatever the case is. By the time you add up those fees on top of a margin, you're at 3 points. Okay. So it's a known quantity. The unknown quantity is what wholesalers do with their margin. Okay. And that's going to be floating around. The bankers, I call this the messy sector because, like Wells Fargo, the biggest mortgage player in the space, April of last year went to all of their branches and loyal people and said, you know what, we're not sending branch referrals to our LOs anymore. We're sending them all to a 1-800 call center. And then here they are, not even a year later, they lay off hundreds of people on one conference call in February. Flagstar cut 69% of their mortgage branches, 800 loan officers. Caliber's had cuts. I mean, you guys know the game, right? This is what's happening when you get private equity in banks and boardrooms. So if you're competing with a bank or a credit union, generally their margins are between 150 to 250. However, I will tell you that they lose a crap ton of money on mortgage. Okay. But banks are generally, this is why they get all into mortgage and then they pull way back, and then they're all in and they pull way back. They're really inconsistent about their delivery, which is why most of us don't have a problem competing with them. I know they're making some noise in Arizona right now because they're giving out these 0 down loans with low rates at credit unions and all that stuff. But remember, that is just temperamental. That comes and goes all the time. It's why I call it the messy sector. The other thing that I've always had not a problem with banks is they generally hire the least experienced loan officers, and their follow-up and their desire and huntability to close a deal and have reputation in the market is low. But just know where they stand. When you're going to go to compete with them, don't bitch, don't whine, just know where they stand. Okay.
The last thing I saw was that independent mortgage banks and mortgage subsidiaries of the chartered banks, they reported a average loss of $2,800 per loan, which is 4 times greater than their Q3 per loan loss.
Yeah, everyone's losing money right now.
Yeah.
Right. One of the cool things about Guild, just because this is a recruiting call and an educational call, but is that Guild is, we sold part of our stock to the public market. So you could see 100% of the financials. In Q4, our retail sector lost 28 million, but our servicing portfolio is just gaining value, right? So this is a business strategy, a business model. There's a lot of companies that took the quick hit money in 20 and 21 and said, I want my money now. Like I'm one owner and I want to fly in my jet and remodel a $10 million house and all that stuff. I'm a short-term thinker. I'm going to sell my loans now on the correspondent side. Well, Gil goes, no, I'll take that money over time. Because when you got 300,000 loans in a servicing portfolio and it kicks off servicing revenue every single month, that's just cash flow you can count on, regardless of margins, regardless of market share, regardless of the feds. And as rates go up, a servicing value portfolio rises in value. So in 2021, our servicing values went down because all of our loans in the portfolio had a higher note rate than what was current. So all of a sudden that value went down, but the revenue from origination went up. So it's the perfect balancer, right? But keep in mind on mortgage bankers, I call this the flexible sector. I don't know if that's the right flexible, but that's because there's so many different models within mortgage banking. Okay. So many different models. Is somebody a primarily, call center model that has a little bit of retail? Are they all retail? Is retail feeding an internal center? Are they correspondent only? Are they a direct seller servicer and retain their servicing, or do they retain it for a while and then sell it? Anyway, who are they and what do they do? And what is their long-term focus? That's, you kind of have to dig that apart. But here's what I see on the mortgage banking side. And I again, talked to a lot of people, and I've coached hundreds of people as a manager and P&Ls, right? And I run 10 P&Ls. Amber runs 2. We see it all the time. So a corporate margin generally ranges between 65 to 125 basis points. Okay. That's what you see. And the reason it's a big range is because every company's different, and some companies just really toy with that and move it around all the time, which is why you've also seen a distrust movement happen with retail and mortgage bankers. Neither here nor there, that's what it is. Then the branch margin is generally set between 205 to 320, again, depending on where you're at in the market. I could see all the revenue generated in Guild right now on every locked loan in the entire country. And I could tell you there's segments of the country like Texas that generate 50 basis points more in revenue than if you're saying California, that is maybe 100 points behind Texas, or then if you're in Nevada or Arizona, it's probably right in the middle. Super fascinating, guys. But anyway, this is where retail and mortgage bankers are sitting as an all-in revenue or margin of anywhere between 270 to 445. Okay. So want to keep learning? This is a commercial break, I guess. I guess we're going to do these QR codes a lot through. I figured some people might want to jump off early. So if you scan the QR code on the left, this is a 3-part webinar because I don't want you to just learn about business models and margins and some strategies and then I dropped you off. The next webinar is going to be all about levels, like where are you at? What skills do you need to obtain? And what's that next step for you? I think the best thing that somebody gave me was a vision for my future. Otherwise I didn't know. I only knew what I knew. And without coaching, without somebody saying, this is your next step, I think your life can suck in the mortgage industry because you can wake up 2 years later and still do the same thing, still struggle with the same thing. So that's what webinar 2 is going to be about. I do a lot more videos and you can decide if you want to be there, but this is a survey that tells me who you are. And maybe you go, God, I really align with these chicks. I'd really like to talk about Guild. I'd really like to work for them. There's a button that says, yes, I want to book a call with Shayla or book a call with Amber. So that's what that is. And then I've got a Facebook group I just started. So all the stuff that I do a lot of interviews. I bring on a lot of my friends and top producers from around. I've just done that, guys, for my branches and my people for years. And I'm finally going, damn it, the industry needs it. So I'm out of the closet. I'm going to help more people. So let's quickly find your margin. Okay. Let's do a live pricing. Pull up your pricing engine. Okay. You might have had to log out. Tammy, thank you for this. While you guys are opening up your pricing engine, seriously do this. Let's make this a working call. And be ready to take some notes and throw in the chat. But what I'm going to do is I'm actually going to share with you a raw margin. Okay, I'm going to show you Guild's raw margin. And the reason I'm going to do that is because I want you to figure out what your margin is. Okay, because if you know, you know, and now you could start thinking about your business model and you can be in charge of it. The point is that you got to own the model that you have. You got to be really confident about the model that you have, and you got to sell the shit out of it, period. But if you don't know and you're just whining, then you're just not going to play to win. That's the whole point. So let's all price out a 740 conventional loan, 20% down. Okay. I'm going to go ahead and share my screen. So I'm going to plug that in for you. Again, I hope you're doing this and not just sitting like this is a TV screen and watching. Purchase. Amber, I see you doing yours too. See, Amber's such a good student.
Yep.
Yes, you are. I love it. Okay, now looks like today Freddie Mac and Fannie are the same, but every day it's a little different. So I'm going to pick a Freddie deal. I'm going to pick an agency preferred, which goes to a bunch of different investors. A AmeriHome, that they're part of a Western bank, so they're not pricing that strong. I'll do Penny Mac, and I'll do US Bank. Where the hell are they? Are they playing ball today? I don't know. All right, so I picked 4 side by sides. They're all the same asset being sold to the same buyer, but some days certain investors have different appetite than others. Okay, so let's just go look at that. And everybody pick your 6.5. Well, actually, let me tell you what to pick. Go pick a 5.75. Okay. So just so I know that you're following along, go put in the Q&A box. Oh, Ryan, I put a DTI 20% just because that DTI price hit got bumped all the way till August. We're not going to deal with that. The only loan level price adjustment I have, as you can see, is the 7/8 for the 740 FICO and 80%. So click on a 5.75. What's your cost to the borrower? Put that in the Q&A or put it in a private chat. Okay. Oh, shoot. Some of you don't have a 5.75 option. Dang it. Okay. If not, go to 6.25. Okay. And when you type it in there, type in like 5.75 with your cost, or type in 6.25 with your cost. Because I have to be able to coach you on this. Okay. So I'm assuming that somebody told me their 5.75 is costing 3.25. That means your margin is 3.25. Now, that's the all-in margin. I don't know how much of that 3.25 is going to the wholesaler or the corporate office and how much is coming to your branch, but that's the overall total margin you're selling. Okay. The next person had a 304. Okay. Another person had 400. I did a 30-day pricing. The FICO, yep, you see it now, 40%. Slow internet, 3.625. 4 points. 6.25 with 2 points. Okay, so 6.25 is showing me a 1 point rebate. So that means you have to add 1 point. So that means you're at a 300 margin. If you're 6.25 with 2 points, you're at a 300 margin. You're at a 302 margin. You're at a 345 margin. You're at a 330 margin. You're at a 325 margin. You guys see what the hell I'm saying? Everything that I said on my slide presentation, Amber, is correct. This is where everybody's margins are. We're all sitting around 300. Okay, 360. Now, guess what? I know a lot of you retailers, you have a 350 margin, but then you take price exceptions. And you're just always given a 50 bip price concession. Well, you're really selling a 300 margin. Okay. So here's a 250 margin. Here's a 300 margin. Okay. You know what's cool? For some of you that have a really low margin, you might go, you know what? I'm underselling myself. I'm making this way too hard. I'm way below the market. You could either say, great, I'll stay way below the market, or you could go, I'm giving Walmart prices for Nordstrom service and I'm worth more. This is something you got to consider. 412 margin, 300 margin, 230 margin, 300 margin, on and on. Okay. All right. So you guys, hopefully that landed. Please put in the question if you don't understand. Yeah, this is no compensation. This is just gross margin. Remember where it's coming from. Yeah, so I see a 190 margin. All right. Thank you guys for participating with me. So somebody asked, how are you calculating this? I'm showing you raw pricing here. Okay. So this is raw pricing, and I've got probably 8 different lenders represented. You can see at this 6.25 coupon. The cheapest is our agency preferred, which we actually priced to 8 different lenders. We bid that out and the cheapest one goes on that rate sheet every day. So I don't know which person that is. PennyMac is worse than Guild. This is our Guild service, Freddie Mac. And then US Bank is a little worse as well today. But again, appetite changes every day because guess what? They're in the background like little scientists going, ooh, our volume was down on a lock today. Let's turn up the pricing here and let's turn it down. You guys know that's what the hell's going on, right? But all right, so now let's talk about, it's cool what now you know revenue. I gave you revenue on typical margins. Hopefully you took notes. Yes, it's recorded. We will get it to you, the recording. Everybody that goes and fills out my survey and leaves me your stuff, I will go send you the recording. And I got a homework assignment for you too. Okay, so what should you do then? Now that you know this information, what should you do? Let me share with you the right.
There might be some more questions on this margin, Shay, if you look in the
okay.
So like mine would be, what was it? Mine would be 3.3 points at 5.75. So what is my margin?
Okay, 5.75 was at par. So that means your margin is 3.375. Okay, again, all in margin. If you're a wholesaler, if you're a broker, part of that goes to the wholesale lender, part of that goes to the broker. And some people who are a broker have a broker, then they have a manager over the broker, and then they have a wholesaler. And so that margin is split in 3 places. So that's it. I don't know where it's all split up. That's a business model internally. Anybody else that you want me to answer?
So then Bill says what to add for comp.
Okay, the comp, it has to come out of that margin. So guys, remember how I said right now, in 2021, the average loan brought in 14 grand in revenue. So 14 grand, let's say the average loan amount in the country was 350. That means the average margin, net margin in the industry was 4 points, was 400 basis points in 2021. Why? Because we all couldn't keep up. We had way more demand than we could handle. So margins went up, right? Just like if you had people standing in line for you to build them a custom home, your fees are going to go up, right? Now, when you don't have people standing in line, you discount your fees and you're a drywall contractor begging to bid their job. It's just how that works. Okay, so what should you do? Listen, it depends on your desired cost structure. I met with a gal the other day who said, I am an entrepreneur and I don't expect to get paid over the next several months. This is what I want. This is what I'm going to build. This is my deal. And what I loved about her is that she knew exactly what she was doing, what she was building, why she was building it. And if that's who you are, you're on fire, right? If you don't know, then that's when you're lost and complaining and whining and all that kind of stuff. The best thing to be at is when you know who your customer is. And those are some people that are not your customer. There are some people that are just going to want the lowest. They're going to drag you through the mud and they're going to make you feel like shit. And they're going to treat you like a commodity. Next, I'd rather generate enough leads and have enough referral partners where I'm not treated like a slave. And I'm not slave to any one client or any one realtor partner. Like that's not the business I want to have.
You taught me something a long time ago that helps me so much in times like this that I've remembered, that said that when you look at the population of people, 80% of people value a relationship and they want a competitive price. And 15% of the population want the cheapest. They don't care about the relationship. They don't see the value in it. They're the ones that are going to drag you through the mud. And 5% like to pay more because they have some ego around it. And so because I have never been at the cheapest mortgage company, I know that 85% of the population are my people, and I will identify a 15%er and be like, oh, you're a 15%er, like you're not my people. And I will service you because you likely came to me from a referral partner and tell you to go shop your little heart's desire. And I'll look at all of your loan estimates and tell you which one I would pick. But I'm not going to let that one person get me down because they weren't my client. And I'm really clear on my model and who I serve. And I really am passionate about building the Nordstroms. And so the Walmart buyers, it's okay that they don't see my value.
Yes, absolutely. It's like if you have a hotel, right? There are people that want to book the most expensive room always.
Yeah.
They are going to pick the most expensive rental car. My husband happens to be one of those people that is like, well, if it's more expensive, it must be better, right? Actually, he's not. He could be pretty frugal, but he loves the 5-star. So there's just different strokes for different folks. And that's not taking it personally. The problem is salespeople is when we take it personally and we internalize it and we question everything. You just can't do that. You have to know what you're doing and be confident in it. Okay. And then I've had this up for a while, but what tools and technology do you need? What desire for leadership? Like I had a guy once that worked for me for a long time. God, I loved him, love this man. But he's like, I'm happy to like work in my basement. I don't need anything. I don't need a receptionist. I don't need any marketing. I don't need any technology. I don't need anything. It'll just be me and my Calyx point, and I'll send my loans to a broker, right? And so then he was able to cut costs, and that's him. Well, guess what? He can never do any volume. It was not scalable. He'd do one loan, then he'd do 3 loans, and he'd do 1 loan, and he's now switched companies 2 times. So, you have to think about how do you have a relationship mindset, a long-term career-oriented mindset, but win transactionally? How do you play guerrilla warfare now? That's what we need to do. So, okay, expenses, because this is a function of revenue. So there's several buckets of expenses that people don't think about, but this is what it takes. Like if it costs $12,450 per loan last year in 2022, it's because we're doing less loans with the same costs. Okay. So administrative, somebody's got to have an HR department with benefits, legal protection, HR services. It might be corporate, might be a wholesaler, or if you're a big enough broker branch, you have that in-house. Quality assurance and compliance. We've got audits. We got to deal with the states. We got licensing. We got post-closing. Finance. Somebody's got to do the payroll and pay invoices and make sure appraisers get paid and make sure you have money in reserves and manage credit lines and all that stuff in our business. That's an administrative cost. Okay. Now I could go in deep on what percentage of your overall revenue should go here and on average, what I see those BIPs cost, but that's not for today. I want to high level get you guys there. Next is loan level costs. Okay. We all have these. Credit reports. We pull credit reports on a ton of pre-quals and pre-approvals that don't close, appraisals, shipping, wire fees, flood certs, verify of employments. I know people are like, screw using all the tools. I'm going to do manual verifications of employment now. Like we're getting down to like, can I save $22 on a thing? Okay. That's not my style. I want to do volume. So, but some people will choose to do that. I've always said, do you want to cut a lot of costs or do more volume? Make more money. That's my budgeting strategy. Make more money, make more calls. Next, you got production support expenses. So like, what do we need to support our production, to drive production? You need a secondary desk doing locks and long-term locks and hedging and investor relationships. You need product development. You need leadership that's going to have the vision, the growth, the hell yeses to the no's. Who are we? Are we selling our servicing portfolio to raise cash? Are we bringing on venture capital to raise cash? Like people are doing crazy stuff, which is why you see a lot of mergers and acquisitions and all kinds of shit happening. Training, onboarding, loan support, and marketing support. So we need to, and again, depending on where you work, different people own different things. So my guy that's working from his basement, he's counting on that wholesale lender to do some of those things. He didn't want any of that in-house, okay? But you still got to have it. Oh, and he didn't want any marketing. He let go of that too. Technology, computer equipment, tech tools, your LOS system, document portals, website and online apps, your CRM, Salesforce, HomeBot, BombBomb, Mortgage Coach, LoanBeam, MBS Highway. I believe it's a high-tech, high-touch approach. That's actually Marianne saying from Guild. It's got to be both. Right now, you need to manage a high volume of relationships. And the only way we're going to do that is through technology. At one point, Amber, I had like 15 people on my team, on the Giver team, but everything was manual. It was all spreadsheets. It was all like whiteboards. We can't afford to have the staff now. You got to be using the tech tools. And then you got your fixed costs: rent, furniture, advertising, licensing, postage, shredding, copying, expenses. This is all real. This is how you run a business. And then finally, last 2, processing, underwriting, funding, leadership, operational costs, and then people costs. And by the way, this is the biggest segment of costs. Forget about production, support, and everything else. How much do we pay in LO commissions, LOA salaries, admin, and marketing? This is the largest percentage of margin in our industry, which, by the way, is why this opportunity is so good. My husband owns another business. Amber's husband owns a business. Like literally, they pay their salespeople like 10%. a lot of times we get paid a huge percentage of the revenue that comes in, and it's a big revenue ticket item. It's why mortgage is so good until, they try to replace us with call centers and bots and all that stuff, which I still don't think is, there's going to be a segment for professionals that have the skills forever. That could be a whole nother talk, Amber. All right. So what's the bottom line? Where do I think you need to be to compete today? I would price your all-in margin around 300 basis points. Okay. Whether you hang them high and subsidize to that, but just know where you're at. And I think 300 is like where we're at in the industry. If in 2021 or 22, we were at 350, we're at 300, guys, we're down like 15% more in revenue. And we have less loans to spread across fixed costs. I mean, it's a double-edged sword, right? And your LO comp, I'd probably put your LO comp at 105 if you wanted that margin. I still know people that want to make 200 bips per loan. It reminds me to like pre-Dodd-Frank, where it was like, I'm going to do 3 loans and charge people 2 points on the front, 2 on the back, and go golfing. I just have never believed that strategy. I've never believed put $1 on somebody's forehead. I believe in then earn the customer today. And if you do it right, that'll turn into 5 or 6 more customers down the road. How? They all have a CPA. They all have a financial advisor. They all have brothers and sisters. They're going to refi at some point. They're going to purchase at some point. So how do you have a transactional mindset right now to win, but keep a long-term view? And for a lot of us, it's choosing to make less comp now to have a bigger future forward. This is a conversation, by the way, most people are scared to death to have. Okay. Why am I having it with you? Because we're freaking loan officers and I want to tell you how to win. Like, don't be hanging in the clouds and be greedy. Like, be aggressive, play to win, know where everybody's at, know where the industry's at. Okay. And if you're in that floating place, maybe your company is like laying everybody off and you're afraid it's going to shut the doors or something. How do I decide where to choose? Because you got to have a decision mechanism. For me, I say, what are you and your values? Who aligns with you and your values, and what is your vibe? For Amber and I, that was undeniable. We had the vibe, our values totally align. What is your vision for your business? If you choose a broker, a banker, a mortgage bank, is that going to be aligned? Do you have adequate coaching and support? Are they investing in technology, product creation, innovation? Can they deliver operationally? Those are like my buckets. Before coming to Guild, guys, I was number 1 at Flagstar Bank. And in 2009, they wiped out a ton of branches just like they're doing now. And I was on the sidewalk. I interviewed 9 mortgage companies in 2009. And I literally hated the industry. I didn't trust anybody. I thought, where's the loyalty back to me? I've busted my ass. I've given my soul. I've worked 12 hours a day. And I had to like really go, what matters to me? What do I want? I don't like changing. I want to build relationships. I want to have influence with my company. I want to be able to work with people day in and day out and collaborate. And I had to think through these things. And I interviewed 9 companies. And I took it as seriously as choosing my spouse, because we spend more time here than we do with our spouse.
I think that too many times we make the decision based off of the wrong metrics, and then we end up not super happy. And like when I chose Guild, I wasn't even looking to make a move, but I met Shayla and I was like plateaued in my business for so long. And I realized it was because I wasn't like passionate. I didn't feel cared for. I was just kind of going through the motions. And then I come to Guild. I had never closed over 20 loans. I was like stuck at 19 month after month. It was crazy. 3 months in, I closed 23 loans. A couple of years later, I closed 67 is the most that we ever closed in a month on my personal production team. And I was like, what changed? And it was all of this, right? The passion, the vision, knowing it's like that what's possible, seeing it. I think that I underestimated for so long the value in all of that until I had it. And now it's what fuels me every day, to fight through this market that we're in.
So one of my Instagram friends joined Guild this week. And so we've been friends for years. And finally her company like demoted her. They brought her back and gave her a senior LO title. And then they approached everybody and said, we're going to make you a field LO. So they basically demoted everyone 3 months later because they didn't want to pay benefits. And she just felt like, what the hell? So I was like, get your ass over to Guild. Let's do this. And I talked to her yesterday. She's 1.5 weeks in and she's like, you guys completely undersold Guild. I'm like, yeah, but I don't want to be that cheesy person. She's like, I'm blown away at the
Oh, me
integration of
too.
everything and what's possible. But anyway, it's just like most people sell, and I always look at the proof, which is like, are people succeeding here? Are people growing here? And are people staying here?
Mhm.
And yes, is the answer to all of that. I don't know how many people, I've 13 years, how many people I know that have been here 10 years or longer. It's crazy. But anyway, this is what I care about. I want to drive a fast car with the latest bells and whistles. I don't want a chunky junk where I have to like, add the speaker aftermarket and do all this shit. I want to collaborate. I like being in a culture where people really share and collaborate. That's why I'm starting this Facebook group, is because I really love that. I love sharing this transparency and vulnerability. I keep seeing you guys say that in the chat. I'm like so grateful for that. This is a hard ass industry, and we're all just regular people. Like Amber and I the other day are like, I think we all thought we're like all that in a bag of chips. We're just loan officers. We are literally just loan officers, for shit's sake. So we got to share and be humble and come to the table with something. I really like stability. I don't like making moves. I like a retirement place. And I think stability comes from people that make long-term decisions always. And then I really want to be at a place where I feel heard. Because if a company's not catering to salespeople, then they're dead. I just think that's important. So, and then coaching is really important to me. And obviously I've been so passionate about that I've started and built a coaching company inside of Guild for LOs. That's been very successful and blowing up. And now I coach all of our managers. So I've got about 100 managers that join me for that coaching program. So let's talk about tactics now this last half hour. Thank you all for being here through the margin stuff. I want a little feedback on the Q&A as we transition. How did we do? Did you get what you came for on that part of it? I want to talk about that for all the leaders that are on the call. They're like, oh, I'm scared. Like, how did I do? Janice, 14 years at Guild. Thanks for saying that. Hello. And my boss is even on the call. Thanks, Andy. Good stuff. So are you guys confused? Have you been able to follow along? Is there any other questions before we transition? Because Amber's doing some really cool stuff and building a lot of momentum, and I want to share that. Thank you, Missy. Oh, great. I need to hear it again, but yes, I understand. Okay, the recording will be really helpful. This is the first time I've taught this. So this was really me going, how am I going to teach it in a way that could be received? Because I really, so many people talk in circles. I see so much of the recruiting game where people are just taking the same math, A plus B equals C, and they're like Jedi mind tricking the math. It just fries me and freaks me out because it's not that hard.
Shayla always says, mortgage math is mortgage math. Like there is not, like everyone is working with the same dollars. And I love the like transparency around it. I think that's what everybody craves. They just want to know. And I think once you know, then like Shayla said, you can go sell it and believe in it.
Look at my other Guild friends that have showed up. 20 years at Guild, Ashley, 11 years at Guild, Delia. How cool. Some of you, I don't even think I've gotten to meet yet. We're on chat together. We're at events together. This is so cool. Trey, what up, Trey? On the East Coast, 10 years at Guild. You guys must be really proud of that. How fun. I didn't even pay you guys to say that stuff, right? So this is cool. Okay, moving on. Nobody's seen to say this. I did get saying that it was a lot of clarity on margins and how do I book a call with you? That QR code on the left, upcoming events, that's actually a QR code for a survey. So I can send you the recording, keep you updated on the next webinar. I actually have a bonus webinar I'll tell you about with Chelsea Pites. And then it'll say, yes, book a call. So some of you live in other parts of the country that I just can't service, right? Like I'm only one person. And the reason I haven't been a recruiter is because I spend so much time driving business and actually coaching my people. I know that the people who work directly for me will be the ones at my funeral. So I spend a lot of time doing that. So my vision is to really help drive recruiting over the second quarter because I want to fill up our branches and then double down into those people. That's just my style and who I am. So honestly, if you live on the East Coast, you're 3 hours away from me, I'd love to chat with you. But the reality is I've got 100 great branch managers that are with me that are totally engaged on being killer leaders in the mortgage space. being business people, driving business, running a business on purpose and by design that are focused on people, profitability, growth, that are engaged in serving other people and being their best. So those are the people I need to introduce you to. Obviously, if you're in Chandler, Scottsdale, then you need to come work for Amber and I. If you're in somewhere in Northern Nevada or whatever, yes. And if you're a rare exception for me, maybe I'll come find you in Colorado or something, and we'll do the Amber deal and set up a branch.
Known to do it before. Yeah.
I've been known to do that. I don't know. That's kind of how I'm in Prescott and how I'm in Arizona. I'm in SoCal. Oh, okay. Come on, guys. Let's just drive the value now. This is good stuff. I hope you hang on with us. Pricing comes down to two things: value and confidence. So you've already talked about this, Amber, but just tactically, what do you think you do to deal with price shoppers? Not just rate shoppers when they rate shop you, but how do you predict, preempt, and prevent that question of, can I trust Amber? Am I going to get a fair deal here? What's just a little couple minutes on your scripting there and your tactics on how you do that?
Yeah, I think that it all comes down to value. Like I know that they're going to pay more for me, right? They could likely go somewhere else and get a lower interest rate. And so I feel responsible to bring the value so that I'm worth them paying extra for. And so I've just always believed that. And I got introduced to mortgage coach in my business about 15 years ago, and it just became like my non-negotiable. Every single client gets a TCA, a total cost analysis built. And that's where I can go through 3 or 4 different options for them. And my thing was always that I'm going to put at least one option on the TCA that they did not ask me for, that I think would be a good solution to meet their goals, because I'm not an order taker. And so many times now clients will go into the credit union or they'll go to Rocket or whatever and be like, I want a 20% down 30-year fix. And then that's what they give them on their LE, and they give them their pre-approval letter and then like, hey, good luck, let me know when you're under contract. And I've just never believed in that. I want them to say, whoa, Amber is super smart. I need her in my world. She suggested things to me that I didn't even know about or think about, and it's like really understanding their goals. And something I'm really passionate about right now is that we be super curious. I think that the level of our curiosity right now with our clients is going to determine our outcome and success with them. Because thinking about the market of like 20 and 21, we were just trying to stay afloat, and we were kind of order taking, and we were just like busting through and going fast. But now the market's different. And I think we've carried too many of those bad habits into today's market. And we have to slow down, and we have to figure out, why are our buyers applying with us? Like, what is their true motivation and desire? And really dig into that, so that when they get spooked, when they see a Goldman Sachs article saying the housing market's going to crash like 2008, when the interest rates pop up, they don't call us and go, I'm just going to stay where I'm at, right? And so getting to know that, but then also sharing that with our realtor partners, because they're on the front lines, like showing them the properties. And what I found recently is that my agents that referred me the client don't even know their true motivation. And so I'm taking it upon myself to really figure this out and to ask the deeper questions, not take the surface level first question. And part of this has been through a journey of like the Phil Jones Exactly What to Say book. So if you haven't dug into those, I don't think there's a better time to become better at conversations and questions. But a couple of them that you could write down today is, when a client comes to you and says, the payment's just too high, my rent is $1,500 and now your payment's at $3,000 and I can't swing it, is instead of being like, oh, well, you could get a cosigner, or how about this, is asking in a curious way, like, gosh, could it be possible that you would know a couple people that could maybe rent from you for a few years so that you could get this benefit of home appreciation while having ownership, but not having this large increase in your monthly payment? Or gosh, could it be possible that you have a family member that would invest in your success in home ownership and go on the loan with you? And so it's could it be possible that you open their mind to let them think about what the solution would be, instead of, like Phil Jones says, leading the witness to like where we want them to go, like, oh, get a cosigner or get roommates or whatever. And another big one we're using a lot right now is when someone says something to you that you don't necessarily agree with, or you don't really understand why they're saying it, like it doesn't make sense, is instead of just trying to say like, well, no, the market's not going to crash. Don't you know, like our inventory is at record lows and supply and demand means that prices are going to go up, is being like, gosh, what makes you say that? Or gosh, like what makes you think that? Because asking these kinds of questions lets you know how to best answer it. So many times I see us answering questions before we even really understand the question. I think we're missing the mark. And that buyer leaves us and they do exit the market until they find someone that really asks the right questions to get them moving. So I think that we have the biggest challenge right now of getting really connected to our clients, and that if we hone in and work on these skills now, we're lights out better come the next market. And so I think that it's just sharpening our skills right now and using tools like Mortgage Coach to be bringing that value, that you can demand the higher price and you can stand firm because you believe in what you have to offer.
Well said. And I think it goes back to the very beginning when I said the average LO in 20 and 21 earned $250,000 and $270,000, the average. So we all thought we were like that good. No, we were not that good, right? No. Now you got to be that good. You got to be a student of the game. You got to be studying. This is the book, Exactly What to Say. I put it in the chat with Phil Jones. I just hired him to speak for me live in July. We'll have a group of 300 realtors, and he's going to speak for me virtually. And if you're part of my Facebook group or fill out this survey, and I will keep you posted on that event because he's unbelievable. Dynamite. And this book is so good. So I'm gonna keep moving forward on this. But I heard you say slow down, really take notes. If you believe that you treat people well today, that you can have 5 to 6 loans for the future. You keep them in your portfolio. You do your annual review calls. You do your post-closing calls. You find out, do they have brothers and sisters in the market? You find out if they have a CPA and a financial advisor. You focus on, we know every loan today is going to result in a refi in the next year or 2 years. It's like really focus. Don't think about your paycheck tomorrow. Think about what you're building. That's a big thing. And then two of these tactics that you use, I think, guys, right now it's about he or she who has the most friends wins. So it's about, if you're going to blow up what you got now, dig a new hole, you're building lists, you're building friends. So who's your list of VIP friends in terms of financial advisors, CPAs, attorneys? How are you going to stay relevant to them? How are you going to include their content to your database? How are you going to serve your database and really be a person that says, I want to help you build wealth in your life? What are you doing there, right? If you're going to work with realtors, as we all need to, you need more of them. Only 25% of your realtors at any given time are actually hustling for business that are buyers. The other 25% are dealing with listings. The other 25% are like overwhelmed and managing their pipeline of one closing and writing repair negotiations and going to inspections. And the other 25 just have their head in the sand. They're on vacation. They're not sure if they're doing this. They're entertaining family. So bottom line is we've all got to be intelligent, leveraged business people. I'm not sharing my screen, am I? No. There we go. That was amazing, Amber. Let's just dive into these tactics from the Leadership Summit. Bold calls. One of my things that I worked on with you right away was that you have to confront issues, Amber. Yes. Amber was the buddy seller that it was like, I just want you to be your friend and I'll show up consistently. And if I'm here and I'm positive and I'm amazing, that you'll eventually send business to me. And I'm like, no.
That's probably one of my biggest shifts was Shayla was like, you are too buddy. And now I make the bold ask. I ask the bold things. And sometimes people are like, wow, you're just going to come out and ask. And I'm like, yeah. And it goes back to believing that like I brought the value. Like I know that I have the value and you're going to be better if you're in my world. And so I'm going to ask the questions. So at the end of every year, I go through my realtor partners and I look to see, how many buyer transactions did they close and how many did I close with them that year so that I can see my pull through with each one. It's a very eye-opening exercise. If you have never done this, I highly recommend that you make this a to-do. And then I can call them and just say like, oh my gosh, first is just edify and appreciate. I'm so grateful for the 4 clients that we closed together last year. Like working with you is one of my favorite opportunities. I'm so excited to grow together. You know, I saw that you closed 12 buyers last year. We got the 4, which again, I'm so grateful for, but I want to do more with you. Like, I feel like we could dominate together and I could increase your business even more because of our systems if we had more opportunities. How can I get 8 this year, right? Like, what do I need to do to get more? And then you find out the real answer. Like, it's that they're not referring you well, or they have another lender and you think you're their primary, but you're really their second or third. And just knowing then better, like, who are your true partners, and then figuring out what you need to do to become a better partner. So now's the time to just really figure out, like, who is in it with you. And then those are the people that I'm going all in with. And I'm like, okay, like, let's do this together. Let's do home buyer events. Let's get out there. Like, I will work my tail off and prospect with you like crazy because you've got my back too.
Beautiful. So you're using something like MMI. If you guys don't have MMI, it's incredible software we all have access to that we dive into all the time. So you can see how many buyers they've actually done, if they're cheating on you, who they worked with outside of you. So you know going in there, Amber, what you're doing. But the difference is you're coming in there saying, I want more. Can I earn more? Give me feedback. How can I be better? That's the bold conversation. And right now we need to be bold. Book club. Let's talk about book club. So how long you've been doing it? And I know it's been effective in getting you top producing agents. So how does it go?
So I've been running this book club for about 7 years. And then towards the end of this last year, I wanted to like revamp it and add some more to my group. And so I literally have just like cold called top producer women realtors and invited them to be a part of a book club, because what I found is that a lot of top producers are where they're at because they invest in themselves and they want to grow. But a lot of people are like, I'm too busy to read books. And I'm such a big believer in accountability. If there's anything that you really want to do in life, putting someone in charge of making sure you get it done is like the key ingredient. And so I'm like, be a part of this group. Let us be an accountability partner for you in your growth. And then it becomes this like amazing mastermind where the agents become friends. They're doing cross deals together. They know each other. And every single agent that joins my book club, I end up doing business with, because we have this values match. Like, we're in this together and we're learning about each other. And it's the easiest cold call I've ever made. And then I'm also finding these agents that are similar to me, right? And that's one of the hardest things for us, is to find the agents that are like us, that we're excited to do business with. So when they say yes to a book club, I know they're growth minded like I am.
That's exactly it, is finding your tribe. Because people are like, oh, I hate working with realtors. Like, well, you're working with the wrong people.
Yes.
Who are you and what do you value and believe in? Let's find those people.
Yes.
So what are the last 2 or 3 books you've been doing?
We did Ninja Selling at the beginning of this year. Killer book. We actually broke it up into 2 months because it's got so much meat in there. And we did half the book in January and half the book in February. And then we just did the Never Split the Difference by Chris Voss, which is an incredible book. Again, kind of really tied into the Phil Jones concept of like the questions that you're asking. He's a FBI hostage negotiator. And so this just comes down to the questions, the quality of them.
I love that you've been doing this over and over again. And the point is that top producing people want to do it. The people who want to learn and grow are sticking with it, and they come over and over again. You've had it for 7 years. And so anybody can start this. I love it. Yeah. All right. And then lastly, let's talk about, everybody can follow you on social and see that you make videos. So I know that we all know we need to be more visible. We're going to have more friends. People need to be able to relate with us, see us, understand us. A large reason why there was over 100 people on this call today is because of video and social media. So you and I feel the same about it. We've got our own hate it, blah, blah, blah. But just tactically, how do you get video done? How often do you record it? Do you post it to someone else? And then how do you come up with what to say?
Yeah. So again, I feel like it's like, if you really want to do something, you've got to have accountability around it. So I hired a videographer, and he comes to my office 3 times a month and we record video for an hour. And so it's forever. I had these dreams of like, I'm going to send a video for this and a video for that. But let's face it, like when are we just sitting around like, oh, I'm going to record some videos, and I'd have the time block and I would just blow through it. And so since he comes every week, I get my videos done. I've been able to like create this vision of getting my content out. And then my strategy for knowing what to say is like, anytime I hear something that I'm like, oh, that was good, right? Like I want to share that. Like I'm like Shayla and just this avid learner. Like I love gaining knowledge. And so same thing, when I start doing something that works or I hear something, I just make a note in my phone of like video ideas, and it's just this ongoing list. So when I'm preparing for them the day before, I can just like look at the list and see what's calling for me. It's like if someone asks you where to go for dinner that night, you can't think of any restaurants. If you try to plan your video topic like in the moment, it's so hard. But if you just keep this running list, anytime someone asks you a question that you're like, oh, that was a good question, or you see a video on Instagram that you're like, that was really good, do the same topic and just put your personal spin on it. But that list is key.
Yeah. I'll tell you a couple things. Amber and I use the same videographer. Thank you, Amber.
Yep.
This is what happens when you hang out with cool people and we all share our resources. I only do it once a month because he actually flies up from Arizona. So I bang out like 20 videos at a time. And if you pay attention, you can always tell when I shot a video based on my nail color.
Yeah.
But I bring like 6 shirts and I'm, changing shirts and doing the videos. So, keep a yellow tab, a note in your phone. Basically, what is the questions that borrowers are asking you? What are people searching for on Google? You can find out these things. What does ChatGPT say? Like, how do I educate a buyer about FHA loans? There's just no excuse. You can use a teleprompter, it doesn't matter, but you got to get it done. Before I had Brandon recording videos for me, I used to have someone come in my office, like you said, and just hold the phone. Because if they were staring at me and doing it, it forced me to get it done. Some of my best videos are just right here on an iPhone. Like you don't need the fanciness. I don't care what your budget is. The point is everybody wants to be educated. Write down your frequently asked questions and continue to do that. Denise Donahue, the mortgage nerd, is a friend of ours, and she's famous for this, but she's been building a library of content for 10 years. So get it on your YouTube page as frequently asked questions. You'll be shocked how many people will spend 2 hours down a rabbit hole on your YouTube page learning from you. You think that person's going to be as much of a rate shopper? They're going to feel like they trust you and know you. So it's super important, guys. All right.
Don't overthink it. Just
do it.
Yeah.
Couple more things for added value. Be thinking right now about what are people's objections? How do you predict, preempt, and prevent things that are going to be talked about? So my marketing manager helped me put together this thing that we're calling the home buyer shield. This was actually recommended I do by a realtor. And it talks about why we have number 1 market share and that we, don't be fooled by the lowest interest rate. What if rates drop? We deliver. So it kind of goes over our value proposition of a TBD credit underwrite. And we'll give you a certificate that if we don't deliver on our credit approval guarantee, we'll give you $5,000 in lost costs. If we don't close on time, we'll pay you $500 because we have a home buyer express. We have a payment protection program. So if rates drop, you can refi. So basically, we all have value propositions, but the question is, are we talking about this stuff? Are we really listening? Are we staying curious? Are we overcoming people's fears? Because if you aren't actively asking and you're not surfacing those things, you're assuming that you did a good job or that you answered it. And we cannot live in that place. We've got to be better than that. And then finally, what the elephant. So from Amber and I, just be direct and address it head on. Talk about what you do and how you get paid. When you're in a pre-approval meeting, just say, hey, look, I want you to know I do this as a free consult to you because the scariest part of buying a house is understanding how it works financially and what your options are. I don't get paid until this loan closes, but my hope is that you become a raving fan because I'm so attentive to your strategy, what you want to do. I'm creative. I'm providing value for me that, that you will refer me to other people. I don't know what I swallowed. I choked on mustard last night. Have you ever done that?
No, but I can't imagine that was very fun.
It was awful. It was so bad.
I choked on sparkle water the other night, and that was really bad too. Like down the wrong pipe hurt.
Oh God. Ask questions, be curious, and listen. Listen, you also need to talk to your agents about what you learned today. Let's be real. Your agents are confused about interest rates. How come you can go to Optimal Blue and see one interest rate? You can go to Freddie Mac and see another interest rate. You can go to Mortgage News Daily and see another interest rate. And 5 different banks and online lenders were selling the same asset to the same buyer, to the same NBS market. You need to be able to explain the function of costs. You need to explain what people are doing in their business models currently. You need to talk about what your competitive advantage is. What decisions have you made for your business? Every one of you have more control and options than you think. Get with your leadership team. Like, I just worked with a girl the other day. We looked at her market share. We looked at where's the business going? Who are you competing with? What are your skill sets? How do you get referred? And I said, boom, this is where you need your margin to be at 275. You need to have 100 bips comp. You need to have a half of a marketing person. You need to start back over at level 1. You need to grow and shrink. You're overwhelmed. This is where you need to win. You need to be able to look in the mirror every day and go, I can do this. I got this. I can do this. I can do 3 loans a month. Forget about the fact that you used to do 12. Forget about the fact that you used to have 4 people on your team. Forget about all that shit. Like, you need to go, this is where I'm at today. And this needs to be my model. And here's how I'm going to win right now. That one client that's going to turn into 5 or 6 deals into the future. And that's a drastic difference than somebody who goes, well, I could pay you 150, or I could pay you 200. Like, it's like, no, you need to know for yourself what it is that you want to build and what sacrifices you're willing to make and how you're going to show up better and be different. And I hope in this call, we did that for you. I want to squeeze you all. I want to look you in the eye and see if you're glassed over or if this was really helpful for you. So any and all feedback, please, when you fill out the survey, let me know. Again, our upcoming events, we've got 2. I always do sales strategy calls for all the people who are in my world. And I met with Chelsea Pites, who's got 50,000 followers on Instagram, written several books. She is just a dynamo at teaching people how to just be authentically themselves on social and get results. So I'm interviewing her. She's actually going to do a social media audit. She's going to audit me and audit another loan officer and teach strategies. So if you give me your information, we'll send the details on that. I'll put in the Facebook group as well. That's going to be on April 12th. And then on April 27th, Amber and I are going to do another webinar that basically talks about what I just talked about with a girlfriend of mine. What level are you at and what's the next level you need to get to? I don't care what you were in 21 or 19 or 15. Like, let's be honest about where our business is at today, what we've got to be really, really good at, and what's it going to take to get to that next level. Because I will tell you guys, if my business still looked the same as it did in 2009 or even 2015, I wouldn't be here anymore. The reason I'm still here is passionate and on fire 18 years later is because I've continued to reinvent and grow and expand and leverage and replace myself and get out of certain parts of the business that I don't like anymore, that aren't my strength. But you've got to be strategic in getting there. Yes, you could live abroad. Yes, you could buy a lake house. Yes, you could have a team of people that do the loan from start to finish and you're on TV. Like, you can have whatever business model you want to have, but let's start from where you are and give you the vision of the next step. So that's on April 27th. And there's the Facebook group. Amber and I are both going to Mexico next week. We are going to Punta Mita, to the Conrad, for the Guild President's Club. So I don't know how we're going to deal with booking calls and everything, but we want to talk to you and we want to recruit. We want to find our tribe and our people and the people who are aligned with, like, let's kick some ass. Let's do this thing. And that want to have this kind of real talk, this kind of level of relationship. So if you fill out the thing and say, I want to talk to either Amber or Shayla, we're going to have to figure that out given our trip next week. I also have spring break the next week after in Hawaii. So this is why I'm not doing another one of these till April 27th. And I want to get with you and I want to introduce you to other managers around Guild if you're not in my spot. And I want to hear what you need so that I can be relevant and helpful, because otherwise I'm just doing this for some ego purpose or something. And that's not what it's about for us. So Amber, any final comments?
You know, the only thing that we can control right now is our actions, our reactions, and our mindset. And I think that it is so critically important that you are around the people that are giving you the right mindset, that are like bringing this kind of energy. I mean, are you guys like me? Like every time I talk to Shay, I'm like, I am ready to run through the freaking wall, right? And it is hard to keep our energy up these days. Like it can be hard, but we have the community to get people there. So make sure you're surrounded by the right people that you're going to thrive through this. Thank you so much, Shay. This was amazing.
So fun. And thank you to my team and Katie for putting this together and scrambling. And we hope to really serve you guys more in this industry. And I want to meet you with where you're at. So thank you. Thank you. Go kick ass. Have a great day, everyone.